All right, picture this for a second. It's Monday morning, it's dark out. Millions of people are waking up to blaring alarms, grabbing a quick coffee, and joining this massive army of exhausted workers on packed trains and completely gridlocked freeways. They rush to the office, put in the hours to earn a paycheck, pay the bills, and then they just repeat it, week after week, year after year. Well, welcome to this explainer, because today we're going to look right past that endless morning commute and we're uncovering the hidden, almost invisible architecture of wealth.
Okay, let's dive into this, because this right here is the central mystery we're unpacking today. I want you to imagine two people. They earn the exact same salary. They live in the exact same city, and you know what? They even have the exact same level of education. Yet somehow, 40 years later, their lives look completely different. One of them is entirely financially free, literally living life on their own terms. But the other is still caught in that brutal morning commute, struggling to figure out how they're ever going to retire. So what actually created this massive difference? It wasn't luck. Actually, scratch that. It wasn't raw intelligence either. It wasn't even the size of their income.
It all comes down to one remarkably simple word: assets. But wait, I don't want you to hear that word and immediately picture some dry, boring accounting spreadsheet. Seriously, erase that from your mind entirely. Instead, I want you to visualize assets as these massive, interlocking steel gears of a hidden, powerful machine. A machine that's just constantly working in the background, engineered specifically to generate financial freedom. Today, we're going to uncover exactly how this machine works and the core investment principle that quietly separates true wealth from just surviving.
Chapter 1. The biggest financial lie.
You see, to truly understand wealth, we first have to unlearn this deeply ingrained script we're handed as kids. We've all heard it, right? It goes like this: study hard, get a secure, well-paying job, and then, as you earn more money, you upgrade your lifestyle. You get the bigger house, the much nicer car. And honestly, on the surface, it sounds completely reasonable. But in reality, it's a trap. It's an endless, rapidly spinning hamster wheel of working just to spend. Very few people actually stop spinning that wheel long enough to ask what actually creates wealth, mostly because we falsely believe it just magically comes from getting a bigger salary. Now, what's really interesting about this is that history tells us a very, very different story. The truly wealthy families, they rarely depend on salaries alone. Instead of trading their strictly limited time for a paycheck, they build systems. Their entire focus is on owning money-producing assets that just keep working and keep generating income even while they're fast asleep.
Which brings us to Chapter 2. What is an asset?
Okay, here's the absolute true definition. An asset is an investment that continues generating income whether you are working, traveling, or just sleeping in your bed. Imagine, for example, owning a slick, modern apartment where every single month someone deposits rent into your account. Or think about owning shares in a highly successful company that literally hands you a piece of its profits directly into your bank account. That is passive cash flow. The money is working for you instead of you breaking your back working for the money. Now, we have to contrast this with liabilities. I want you to think of assets as money flowing smoothly into a giant, secure bank vault. Pretty nice, right? Now think of liabilities. Let's say a brand new, incredibly expensive sports car, as your wealth just draining right out of that vault through heavy, rusty chains. The absolute second you drive that car off the dealer's lot, it demands insurance, constant maintenance, and premium fuel. It costs you money rather than producing it for you. Now don't get me wrong here, not every fun purchase is a total financial disaster. We're all human. But deeply understanding the difference between the things that feed your vault and the things that drain it, that will completely change your financial trajectory.
Chapter 3. The Invisible Machine.
This right here is where wealth becomes this beautifully engineered, self-sustaining mechanical structure. Just look at these gears. We're talking rental properties, index funds, small businesses, book royalties, dividend-paying stocks, digital products. Each one of these investments is another heavy, interlocking gear you're adding into your invisible machine. You aren't just buying pieces of paper on a screen, you are assembling an absolute powerhouse.
And here is the exact mechanical sequence to get it running. Step 1. Acquire the asset. Step 2. Let it generate that sweet cash flow. And Step 3. Reinvest those returns. So the crucial point is that reinvesting is the actual fuel. At first, the machine is going to move almost painfully slowly. But as you keep reinvesting, it gains this massive, unstoppable momentum until it literally starts powering itself without any of your physical labor. It's about patience, guys, not speed.
Chapter 4. The Lifestyle Inflation Trap.
Every great documentary has a villain, right? Well, for your wealth, this is it. Look at this chart.
As income goes up, expenses go up by the exact same amount, leaving net wealth at a flat zero. Modern society constantly, relentlessly pushes us to spend, turning what used to be a luxury into the new baseline normal. Social media definitely doesn't help with that. This is called lifestyle inflation. It's like rising ocean water. Every time you get a raise or promotion, the water level of your spending rises right along with it, slowly and silently drowning your wealth.
So escaping this trap requires a pretty sobering reality check. It means actively choosing long-term investments over unnecessary, short-term consumption. I'll be honest, building wealth doesn't always look super exciting on a Friday night. It requires you to start thinking in decades rather than just weekends. It's making the choice between the instant flash of designer luxury bags sitting in a closet versus the quiet, enduring growth of a forest. The forest takes time, but it lasts for generations.
Chapter 5. The Power of Compounding.
And this brilliantly illustrates the solution. Because if lifestyle inflation is the villain of our story, compounding is the mathematical magic that swoops in to save the day. Think about it. Year 1, you plant a single tiny seed. Year 10, it's a growing tree. Year 40, it is a massive, dense forest. That single seed erupts from the soil, grows branches, drops more seeds of its own, and before you even realize it, an entire sprawling ecosystem is born from just one choice. Well, investing works the exact same way.
This is the formal definition of compound growth. It's when returns that remain invested generate their own future returns over time. Put simply, your money makes money, and then that new money goes out and makes even more money. Now, it's really important to stay grounded here. Compounding doesn't magically erase risk, and obviously investment returns are never entirely guaranteed. The market fluctuates, but historically speaking, this exponential snowballing catalyst is the ultimate reward for disciplined long-term investors. It literally is the engine of financial freedom.
Chapter 6. Thinking like an owner.
Which brings us to the climax of our explainer today. It's about fundamentally shifting your psychology from being a consumer to being an owner. Employees trade their time for income. Owners, on the other hand, benefit from assets that create ongoing value. Now, to be totally clear, neither role is inherently better than the other, and actually, a lot of highly successful people are both. But mathematically, if you stretch this out over a 40-year timeline, these two approaches yield completely different financial realities. The big question isn't what your job title is. The question is how much of your income you are actively using to build ownership.
Thousands. That is the number of small, consistent, almost invisible decisions it takes to build this machine. I hate to break it to you, but true wealth does not happen overnight. There is no magic get-rich-quick button. The gap between immense financial stress and total financial freedom usually isn't caused by one single dramatic, movie-worthy decision. Nope, it is the silent, steady accumulation of thousands of disciplined, everyday choices.
Let's move to and see how this builds, because this brings us right back to you. Every single dollar that comes into your hands has a choice attached to it, a fork in the road. Will you spend it, or will you put it to work in the machine?
So instead of waking up and asking, what can I buy today? I want you to start asking yourself this. What can I own today that creates value tomorrow? Because honestly, the most valuable investment you will ever make isn't a specific hot stock or a trendy piece of real estate. It is the habit of thinking like an owner. When you own productive assets, your money finally begins working alongside you. And that changes absolutely everything. Thanks so much for joining me on this explainer.